Dave, U.S. ETF assets reached $10 trillion in 2024. There's an expectation that it can get to $20 trillion by 2030. So what's driving this exponential growth across the industry?
Thanks for asking. Great question. Look, we are reaching escape velocity in the ETF space right now. So you're seeing growth in fixed income, you're seeing growth in active, you're seeing growth of investors really getting a better understanding of the structure, and they're just going to continue to grow. I think there's an imbalance in fixed income in particular, so I think we're going to see a huge amount of fixed income over the next 5 years or so. I think 20 is going to be just the beginning, actually.
And when they first got going, ETFs all tracked passive indexes. But now you're seeing lots of activity in the active ETF space. In fact, I think there's more new active ETFs coming out than passives, and it's evening out or even surpassing it when it comes to the dollar flows. Why is this happening, and do you expect that to continue?
I expect that to continue as well. So the active wrapper is just a way for ETF issuers to bring new strategies into the marketplace. They get a little more flexibility in what they can do with the underlying. You get a lot more customization for investors. So we launched a suite of active funds just recently that we call distributing ladder ETFs, and they are under the active banner because we're going to be managing those portfolios a little bit better for investors. That's one of the ways that issuers are using this active ability to bring funds to market.
And how does Northern Trust work with advisors to keep it simple? Because there's lots of new active funds coming out, but there's also some simple index passive-based ETFs that, frankly, are good and cheap enough to use.
Yeah, you're exactly right. Look, when you boil it down to the investment thesis, right? You want to enable your investors to get to the simplest way to get that investment thesis, right? So that always starts with index-based, right? Like, it's really simple. This set of assets will be tracked in an index. The fund will track it. Very simple. When you get to using the active wrapper, or when you want to customize things for investors, and as the industry has grown, it's more important to really customize the investor experience. You're going to move towards more active wrappers. But really, it's all about, you know, they say, keep it simple, stupid, right? Like, bring investors a product that is easy for them to understand and easy for them to incorporate into their portfolio. That's what we're trying to do.
Is the ETF market just getting too crowded? Because an investor might have an S&P index fund, and they have their Apple, their Nvidia, their Microsoft in that one at a very large weighting. So do they really need to buy a specialized tech ETF or some of the other stuff that's coming down the pipe?
Look, I've been hearing sort of complaints about the industry being saturated really for 20 years already. When there were 100 ETFs and we went to 150 or 200, people started asking me about industry saturation. I think that if you think about the world, there's so many different nuances around the flavor of what people like, right? Like, I actually don't see it as saturation. Again, it gets back to this sort of investors like a certain thing. We can give them a customization, like muni bond ETFs are a great example. There are some big muni bond index ETFs today. Northern Trust just launched a suite of Northern Trust muni bond index ETFs as well. They look very similar, but these are under the Northern Trust ETFs banner, and that's important for investors. So they know us, they've done their due diligence on Northern. That's why they would use those funds.
And then finally, let's just talk a little bit about the evolution of funds. You had mutual funds, and now you're seeing ETFs take the baton from them. Where does tokenization come in? Will that eventually start taking the funds from, and digital assets, will they essentially start taking the funds from active ETFs?
Yeah, so I don't think about it as taking funds from active ETFs. I think tokenization is the next iteration. I don't think the evolution from mutual fund to ETF. When you think about tokenization, I want you to think about the evolution of stock certificates to book entry, how we manage our stock positions today. And tokenization will be that next level. And that will give people a sort of a portability on their positions. 24-hour trading, lower friction, instant settlement. All of those things are coming. I think tokenization is going to be the next big thing. And it's actually going to be one of those things that is starting now, but we're going to be having this similar sort of conversations about tokenization for the next 25 years. It's going to be really cool.
All right, well, thanks for coming on and talking about it.
Thanks so much for having me. Appreciate it. Thanks.